Part 1, Technical Analysis for Financial Investment Markets. Segment 1 is a production on the presentation divided into 4 segments. Today will be the fundamental and technical analysis. The second hour of this will involve the question of does technical analysis work? The third section will be a discussion of criticism of technical analysis and how we address that. And section 4 will be an explanation of assumptions behind technical analysis. Fundamental and technical analysis. These each bring value to the process in at least 3 ways. First, they complement one another and improve skills in timing and trades. And what this means is that when you look at a fundamental indicator, it tells you something about the relative strength or capital formation or profitability of a company. This directly affects the price path and the future price path of that stock, and this is where it transfers over to technical analysis. On the other hand, the technical analysis is always going to be focused on price and volume and momentum. And just as fundamental analysis affects technicals, the technical analysis also affects the fundamentals. Second, each of these confirms and cross-confirms reversal indicators. A reversal indicator is a signal that a price is about to turn and move in the other direction. And this occurs, for example, when momentum slows among buyers and then sellers take over, or when momentum slows among sellers and buyers take over. And what you'll discover when you get into an analysis of the technical side of things with price, momentum, and other indicators, you'll find that it often relies on the volatility on the fundamental side to determine how the technical side is going to act. Third, when used together, fundamental and technical indicators create a very wide view that brings in elements of price as well as financial trends. What this means essentially is that fundamental analysis by itself is historical and technical analysis by itself is current. And each of these have advantages and disadvantages. The wide view you create when you use both of these together is that you coordinate and can see the direct relationship between price and price movement on one hand and financial trends on the other. This becomes a very valuable form of insight when you get into matters such as charting and price analysis and combinations of price and volume and momentum, because you will find that you focus on price for most of those things, but the fundamentals directly affect how price is going to move.